Hello everyone, hope you are all doing good. This is Imdad, and we're going to discuss a very interesting thing that's called the patterns of chat patterns for crypto trading. In this crypto, where we can see there are different types of patterns, like you can see diamond patterns, bullish, bearing. So we'll discuss this all of them. That will be easy for you to understand what's going what is going in this market, and you can predict with that analysis as well as you did for a better version. So let's go. We're going to these patterns. One is called diamond patterns, bullish, bearish, double top, bearish. There are different types of patterns. Just see that one by one. That if you see that the trend, see if the market is going from under to up, down. This is called the extending triangle bullish in continuation. That's mean when the market is going down to up, that is scrolling, and that is going uh, this pattern, and it's going this upside, and this is the opposite of this triangle bearish continuation. This is the opposite of that. And if we see this market, then you can see the market from is down to up, and this is the pattern. And from this here, the market makes a pattern like this. If basically this is a if you understand this pattern, you will be better for that. See, if this is a upper system, when the market touch that line and break that line, this line, the market is going up here. After that, you can see the market cross that line. This is trading upline, and this is very strong point. The market could be here, but when you can see that the market crossed that line, which is the upside, then sorry, then the market from here you have to entry when the market touch that line or nearly by with this line. So if the market is going here with that position, you have to entry from here. After that, the market is going up with this position from here to here. So this is the call of the ascending triangle. Same that point, if the market, you can see the opposite of that. If you can see the market is going opposite, like if the market is going opposite of that pattern, then it's the same. As you can see, the market is going up to down, same that pattern. So this is the line. If the line cross that, that's downtrend. That's mean this cross that line and is going up, and you have to entry from here. The market is going down. So this is the pattern you have to understand with that. And if you can see the symmetric triangle is the same one scan, so you have to understand the upper line and the lower line. There are different types of pattern makes this types, and this types triangle. With that system, you can see the rectangle forms bullish trend, bullish continuous, and this pattern. You can screenshot this trends, or you have to print out when you are going to trend trading, and you can print out with your table in your on your table, and you can choose with this for when you are beginner. But after that, you can understand its orders. So you can see the reverse pattern. If you see this market is going up, 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 and in this position, the market is pattern is now diamond. If you can see the diamond pattern, the market is same as like the diamond. There are four angle and it's going diamond pattern. If when the diamond pattern is happen, the market are going down. This is the bearish. So you have to understand this all of them. This is very interesting pattern, double top pattern. You can see the resistance zone. Basically, this upper zone when you have to you can't break this line. It's called resistance zone. So if the resistance zone is here, you can see if the under this is a support zone. Resistance zones you can't break that line. You can see the previous history. My market is now here, but in this previous history, you can if you want to see that the highest zone, this is the highest zone, so you can't break this line. So this is a resistance zone. This is support zone. You can't break that line. So in the support. So if after that you can see that the line already broken up, broken down, and this situation. So the market is when the broken down, the market is going down. So you have to understand the double tap button. The market is when the resistance decline the position, the market is going down. This is a very important patterns. There are huge levels of patterns. This is the most known patterns. You can see this is a zone, resistance zones. If we can see the history, the market previously crossed that line here. See, today the market when today the market is going the market start from here. This is the resistance area. Yeah, see the market is now going up. Why? Because the resistance line cross. When the resistance line cross, that's the mean the market is see the yellow. So the market is going up. When resistance line broken up, then when the market start from here today, it's going up. Okay, so you can do one thing that if the patterns is now, you can see that if the market, this is the resistance area, the market, what happened for next? The market from here to here to test that line, and again this market will be going up. So this is the entry point. As you can see, this is an entry point. So if you enter from here, the market will going up. Okay, so this is the pattern. You can see with the resistance. You have to understand the resistance area. If this broken up, then you have to test again and enter from here to up. So this is the resistance zones, double trap, and this is called double bottom pattern. The resistance supporting zone, resistance area. As I'm telling you, there are same patterns: up, down, down, up, down, down. It's broke that line and it's going up. Trend reversal. So this is when you will the practical, then we will understand this better. So cup and handle pattern. In this cup and handle pattern, you can see that this markers looking cup. A cup, there is same that pattern, and this when this handle is down, then it's going break out again. So this is very interesting. Same as that here, the cup and it's going break out. This is the resistance area. You can see this is the resistance area. When you break the up, then it's going up. Okay, same as that. This is the resistance area. That's called neckline. And when the break out, then you have to buy from here. It's going up. If you can see here, then this is a ways of operation. Price target higher. You can see down, up, it's going down, and the resistance area and it's up. It's not important, but you can see from here. Macro downtrend, lower height, lower lows. It's going this pattern, and when the market is break that previous line, it's going up. So if the first target was opening position from here, you can entry from here. Okay, before sometimes you don't understand, this is the entry area, but when the market is up, and you have to again understand, when the market is going down and again it's going up, the previous pattern, see this is the red and it's crossed this green, you have to entry from here to going up. Okay, now it's a continuing pattern. It's going continue. When the market is going up, it's to continue going up. Okay, product price is the same, not as important. So as you told, that the resistance area, the support area, if that markets from under to resistance area, well, you have to wait until the resistance area or support area broken. When the support area broken, you have to entry from here to up. If the resistance support area broken, then you have to entry from here to down. So firstly, you have to identify the resistance area and support area. So if we can see that the resistance area, the resistance area and the support area. So the market, when this market is going here from here, so if the resistance area broke, then you have to entry from here because the down and up. When it's broken down, then you have to entry from here when the market is going up and bearing. So if we see that market have their own pattern, to understand it better when it's going very positive. If we see with this other market, like BTC, see the market is have the resistance area. See the previous from here, the resistance area, the market is here, the previous history. Once the market, sorry, from here to here, so once the market, this is the second resistance area. So the things is when that market cross that line, will cross that line to be here, then the market, when this cross that line, then you have to enter from here, then market will gone. You have to wait from here. If this line is rejected from here to here, it's rejected from here, then you have to enter from here to again to downtrend. So you have to wait to see what is happening. So it have to block or not. So thank you for today. Stay happy and stay with that trading. Hope you're all doing good. Thank you.